Bitcoin from Scratch, Understanding the Digital Revolution, Episode 10, The Future of Bitcoin and Cryptocurrencies. In this episode, we will explore emerging trends, potential technological developments, and the potential impact of Bitcoin on the global economy. By analyzing the future trajectory of Bitcoin and other cryptocurrencies, we aim to provide viewers with a deeper understanding of the trends and innovations that could shape their evolution and influence the financial landscape. Additionally, we will discuss the societal implications of widespread cryptocurrency adoption and the role that Bitcoin could play in transforming the global economic system. Emerging trends. Institutional adoption. Major financial institutions are showing increasing interest in Bitcoin, viewing it as a diversification asset for investment portfolios. Emma Pecenicic, Director of Digital Products at Fidelity, highlights that it makes sense to allocate a percentage of the portfolio to this asset. The entry of institutional investors has provided legitimacy to Bitcoin, helping it transition from a niche asset to a mainstream investment. As more institutions, such as hedge funds, pension funds, and insurance companies, consider Bitcoin as a hedge against economic uncertainty and inflation, its influence in the financial market continues to grow. Institutional adoption also contributes to reducing volatility, as the long-term investment strategies of these entities help stabilize the asset's price. Furthermore, the integration of Bitcoin into traditional financial products, such as exchange-traded funds, ETFs, and investment trusts, is making it more accessible to retail investors who may not have been comfortable directly purchasing and managing digital assets. The involvement of large financial players, such as BlackRock and Morgan Stanley, is also boosting confidence in Bitcoin among mainstream investors. These institutions bring sophisticated risk management strategies and deep liquidity to the market, which helps to mitigate some of the concerns around Bitcoin's notorious price volatility. Moreover, the increasing number of companies accepting Bitcoin as a payment option adds to its utility, making it a more versatile asset that serves both as an investment vehicle and as a functional currency for everyday transactions. Government policies and regulation. The recent victory of Donald Trump in the U.S. elections has led to expectations of more favorable policies towards cryptocurrencies, including the proposed creation of a strategic Bitcoin reserve. The regulatory landscape is rapidly evolving, with governments and financial regulators around the world striving to establish frameworks that balance innovation with consumer protection. Positive regulatory developments, such as clearer guidelines for businesses operating in the crypto space, could drive further adoption of Bitcoin. Conversely, restrictive regulations could present challenges. The interplay between regulatory policies and technological innovation will be a critical factor in shaping the future of Bitcoin and its role in the global financial system. Regulatory clarity is especially important for institutional investors, as a well-defined legal framework can reduce uncertainties and risks associated with investing in digital assets. In addition to the regulatory efforts in the United States, other countries are also working on crypto-friendly regulations to encourage innovation and investment in the digital asset space. For example, countries like Switzerland, Singapore, and the United Arab Emirates are positioning themselves as hubs for cryptocurrency and blockchain technology by offering regulatory frameworks that are supportive of crypto businesses. This competitive regulatory environment is pushing more governments to reconsider their stance on Bitcoin, potentially leading to more widespread global acceptance. However, the challenge remains in finding a balance between fostering innovation and preventing illicit activities, such as money laundering and fraud, which requires international cooperation and standardized regulations. Technological developments. Blockchain innovations. Emerging technologies are expected to transform the cryptocurrency ecosystem in 2024, enhancing interoperability and transaction efficiency. One of the key innovations is the development of Layer 2 solutions, such as the Lightning Network, which aims to increase Bitcoin's transaction capacity and reduce fees. These solutions are designed to make Bitcoin more practical for everyday use, improving scalability and addressing concerns related to transaction speed. Additionally, cross-chain technologies are being developed to enable seamless interactions between different blockchains, fostering a more connected and efficient crypto ecosystem. This improved interoperability will facilitate new use cases and foster greater adoption across various sectors, such as finance, supply chain management, and digital identity. Another significant technological advancement is the introduction of sidechains, which are separate blockchains that run parallel to the Bitcoin network. Sidechains allow for the testing and implementation of new features without affecting the main Bitcoin blockchain, providing a sandbox environment for innovation. This approach helps to ensure that Bitcoin remains secure and stable, while also allowing for the development of new functionalities, such as smart contracts and advanced privacy features. The combination of sidechains and Layer 2 solutions could significantly enhance Bitcoin's capabilities, making it more versatile and adaptable to changing market demands. Non-fungible tokens, NFTs, and decentralized finance, DeFi, these areas continue to evolve, offering new opportunities and challenges in the crypto space. NFTs have expanded beyond digital art to represent ownership of virtual assets, intellectual property, and even real-world items. As the NFT market matures, new platforms and protocols are emerging to address issues like copyright, licensing, and intellectual property rights. DeFi, on the other hand, continues to disrupt traditional finance by providing decentralized alternatives for lending, borrowing, and earning yield. Bitcoin is also being integrated into DeFi platforms, allowing holders to leverage their assets in decentralized applications. The combination of NFTs and DeFi is opening up new financial opportunities and creating innovative products that bridge the gap between the digital and physical worlds. The development of NFT lending platforms and fractional ownership models is further democratizing access to high-value assets, allowing users to participate in the ownership and profit sharing of digital and real-world assets. Advancements in cryptographic security. The future of Bitcoin also involves advancements in cryptographic security that aim to make the network even more robust and resistant to attacks. Technologies such as quantum-resistant cryptography are being researched to ensure that Bitcoin remains secure in the face of potential threats from quantum computing. These technological improvements will be crucial in maintaining the trust and integrity of the Bitcoin network as it continues to grow and scale. Additionally, developments in zero-knowledge proofs, ZKPs, are being explored to enhance privacy and scalability, enabling transactions to be verified without revealing sensitive information. Enhanced cryptographic techniques could make Bitcoin transactions more private and secure, addressing one of the major concerns of regulators and users alike: privacy in financial transactions. Potential impact on the global economy. Financial inclusion. Bitcoin has democratized access to financial services, allowing unbanked individuals to participate in the global economy. By providing a decentralized and accessible form of currency, Bitcoin has opened the door to millions of people who previously lacked access to traditional banking systems. In regions where financial institutions are scarce or unreliable, Bitcoin offers a viable alternative for saving, sending, and receiving money. Mobile wallets have made it easier for individuals to access Bitcoin, even in areas with limited banking infrastructure, thereby enhancing financial inclusion and empowering people with greater control over their financial futures. The impact of Bitcoin on financial inclusion is especially evident in countries with high remittance rates, where individuals rely on cross-border payments for survival. By providing a cheaper and faster alternative to traditional remittance services, Bitcoin is improving the financial well-being of millions of families. Monetary policy and financial stability. The growing influence of Bitcoin presents challenges to traditional monetary policy and financial stability, requiring an adaptation of existing regulatory frameworks. Central banks are closely monitoring the impact of Bitcoin on global financial systems, as its decentralized nature poses a potential threat to the control that governments have over monetary policy. As more individuals and businesses adopt Bitcoin, central banks may need to rethink their approach to money supply and interest rate control. The rise of Bitcoin and other cryptocurrencies has also led to discussions about the creation of central bank digital currencies, CBDCs, which aim to provide a government-backed digital alternative while maintaining control over monetary policy. CBDCs could coexist with cryptocurrencies like Bitcoin, but their introduction will require careful planning to ensure that they do not stifle innovation or limit the benefits of decentralization. The coexistence of CBDCs and Bitcoin could lead to a more diverse and resilient financial system, where individuals have multiple options for storing and transacting value. Store of value and inflation hedge. Bitcoin's role as a store of value and hedge against inflation has gained traction, particularly in countries experiencing economic instability or hyperinflation. As central banks continue to print money to stimulate economies, concerns over currency devaluation have led investors to seek refuge in assets with limited supply. Bitcoin's fixed supply and deflationary nature make it an attractive option for preserving wealth. In regions where local currencies are losing value rapidly, Bitcoin has become a popular choice for individuals seeking to protect their purchasing power. The ability to easily transfer and store wealth digitally also makes Bitcoin a convenient option for those looking to safeguard their assets in uncertain economic climates. As Bitcoin matures, it could become a cornerstone of the financial portfolios of individuals and institutions looking to hedge against inflation and currency risks, similar to how gold is used today. Cross-border transactions and remittances. Bitcoin's decentralized network allows for low-cost cross-border transactions, making it a valuable tool for remittances. Traditional remittance services are often expensive and slow, particularly for individuals sending money to family members in other countries. Bitcoin offers an efficient and cost-effective alternative, allowing for near-instantaneous transfers without the high fees typically associated with remittance services. This capability has the potential to significantly impact developing economies, where remittances make up a large portion of household income. By reducing transaction costs and increasing the speed of transfers, Bitcoin could improve the financial well-being of millions of people worldwide. The growth of Bitcoin-based remittance platforms is also fostering new business models that can offer additional financial services, such as savings and loans, to underserved communities. The emergence of Bitcoin as legal tender. Bitcoin's adoption as legal tender in countries like El Salvador is an important milestone in its evolution. This move demonstrates the potential for Bitcoin to function not only as a store of value, but also as an everyday currency. The success or challenges faced by countries that adopt Bitcoin as legal tender will likely influence future decisions by other nations considering similar measures. If successful, Bitcoin's adoption as a national currency could pave the way for broader acceptance, encouraging more governments to integrate cryptocurrencies into their economies. However, the challenges of price volatility and infrastructure development will need to be addressed to ensure that Bitcoin can function effectively as a national currency. The adoption of Bitcoin as legal tender also presents an opportunity for countries to reduce their reliance on foreign currencies, enhancing their financial sovereignty and resilience in the face of economic pressures. Objective: this episode aims to explore the future prospects of Bitcoin and its influence on the global financial system, providing an understanding of the trends and developments that could shape its evolution. By examining both the technological advancements and the regulatory environment, viewers will gain insights into how Bitcoin might impact the broader economy and its potential role in shaping the future of finance. We will also discuss the potential societal impacts of widespread Bitcoin adoption, including how it could redefine the concept of money and financial sovereignty in the 21st century. Disclaimer: this content is educational in nature and does not constitute investment advice.